please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. Well, this morning the SGX Nifty is indicating the start will be in the green. Let's see how things go. It's been a very volatile last few days, so we'll take it as it comes. For now, let's just try and analyze all the stocks that are in the news this morning and how you should be approaching them. Our research team is here to give you that list. So let me just welcome all of them. Hi guys, morning. Anuj, what are you looking at today?
So, Sonia, before that, I just want to make a point here on market. There are days when you bat like Sehwag, try to hit everything. There are days when you bat like Dravid and try to leave some balls. Today is that kind of day, perhaps. I just want to observe the first half. United Breweries is a stock I'm watching. It's among the strongest F&O stocks within 3% of a 52-week high. So let's see. Quite a bit of delivery-based buying on United Breweries over the last few days. IGL is the other one. It's bouncing back after a big correction. Has reclaimed its 20-day moving average and big delivery buying. So, I would want to see if there's a 20 DMA halt. If that is the case, then perhaps this theory will not work out. But if it isn't, then perhaps there could be some more follow-through in IGL. That would be interesting.
Okay. Well, there are some days when no matter whether you bat like Dravid or whether you bat like Sehwag, the bulls are getting out, and that was how it has panned out for the past few days. Okay, today one sector that's definitely going to be in focus is will be consumer durables, where the import duties hikes were announced. Anisha is here to tell us which is red and which is green. Anisha.
Well, yes, I'll start with the news, which is that the basic custom duties on AC, refrigerators and some washing machines has been doubled to 20% versus 10% earlier. And on compressors, which is a very important component of refrigerators and AC, it has been moved up to 10% versus 7.5%. Now, remember, this comes as an incremental negative for the industry, which is already grappling with a weak summer. The margins are already compressed given the fact the commodity pressure as well as the rupee depreciation and the changes that we have seen in GST. Now, in terms of the greens and the red, well, I expect the likes of Dixon and Amber to be in the green because remember, these are the key beneficiaries given the local manufacturing will get a push. What will be in red? Well, it will be Voltas for sure because HSBC, for example, believes that they have 45 to 50% exposure to imports, and also the Beko JV that they form, 100% of those appliances were to be imported. Havells Blue Star will be somewhere in between because they have sizable exposure to imports, but they are also working on import substitution and setting up factories in India. And the likes of Whirlpool and Crompton Consumer will not see too much of the red given the fact that they have high local component. In fact, back to you.
Okay, Anisha, thank you very much for that. One industry that has only been the receiving end of bad news has been the aviation sector, and today a double whammy.
Yes, I was speaking to a lot of aviation industry sources, and one senior told me that, things have been so bad. I don't know how bad. Every day I wake up in the morning and I hear even more bad news, so it doesn't surprise me anymore. But just to give you the news flow, the customs duty on aviation turbine fuel imports has been hiked from 0 to 5%. Now, there's no direct impact because most of these airlines don't import ATF currently because it's a cumbersome process. But what this means is that immediately ATF prices will rise by about 5% in the domestic market because the pricing mechanism of oil companies is based on import parity pricing. And at a time when there's weaker rupee, higher crude, the last thing you need is higher ATF prices because of the government's moves. Aviation industry sources have said that this policy is detrimental to airlines in the current environment of a weaker rupee and higher crude. And what is even more disappointing is that the industry was looking for some relief in the form of inclusion of ATF in GST. It's not come through. So expect more pressure on these stocks.
Okay. Well, that's not looking very good for them. But tyre companies as well, is there any impact? I think import duty on radial tyres is up.
Yes, and that's a sentiment positive for the tyre companies. So I expect makers like Seat, Apollo, etc. to be in the green. What's taken place is the import duty on passenger vehicle radial tyres has been increased from 10 to 15%. So this will prevent, dumping of cheaper tyres into our markets. It's a marginal positive, I say, because anyway imports were very less. Just 10% of the overall passenger vehicle tyre market was being imported. So it's a positive, but not as much.
Okay, so we'll keep an eye on tyre stocks, but Lata, IT stocks, we had some correction yesterday, but there could be some more if rupee rallies.
Yes, now that is the big if.
Yeah.
The curb rates, NDF rates are indicating flat because the positive of the import duty, which was only a sentiment positive, is getting cancelled by crude. So the dealers have messaged me that it's going to be a flat start. Nevertheless, I would assume a sentiment positive for the rupee would be a sentiment negative for IT.
Okay, well, Titan is one stock that could see a relief rally today. Reema's here. She'll tell us why. Reema?
Yes, Sonia, we could expect a relief rally in Titan because, for one, there is no import duty which has been imposed on gold, as was widely feared in the market. Secondly, yes, there is going to be some import duty on diamonds as well as some polished goods, etc. But there are reports which suggest that the company's bulk procurement of diamonds actually comes locally. So that also may not have too much of an impact. And if you see the stock price, it's corrected from levels of nearly 940 all the way down to 810, which is where it's currently quoting at, in a span of 45 days on fears of any kind of a regulatory overhang. That concern is lifted, so Citi says they see an enhanced buying opportunity in Titan.
Okay, Reema, thanks a lot for that. Ekta, some news on strides?
Well, yes, we've accessed the 3 observations which were issued to the Bangalore facility in an inspection by the US FDA in August. So the 3 observations basically are largely procedural in nature as per analysts, but maybe there could be a little bit of a sentiment negative on account of it. But remember that they've already received a product approval from that particular facility post the inspection, so the impact is expected to be limited, if any.
Okay. And finally, Anisha, we are back to you. Any other stocks we should keep on our radar?
Well, quite a few. I'll start with NBCC because that one has received an in-principle approval from Air India to monetize or redevelop their land in Delhi. The total land can be around 30 to 35 acres, so sentiment positive there. Moving on to Torrent Power, wherein they have bagged an order for around 115 megawatt wind project. The tariff is around 2.76 and the investment is around 850 crores. Let's move on to Hero MotoCorp because they have made an upward revision in the prices. That will be effective from October 3rd, so sentiment positive there as well. SBI, CNBC TV18 Newsbreak confirmed. We were telling you yesterday how they might look at liquidating their stake in SBI General Insurance, and now we understand that they have got the approval to liquidate 4% stake in the company, and they will get around 482 crores as a result of that. TD Power has been buzzing for the last few days on account of buyback expectation. The details are now out. This is at the value of around 256 per share, and it will form around 6% of the company's equity. And lastly, on Reliance Capital, it might see a tad bit of red tick given the fact that the ED and CEO of the company, Mr. Devang Modi, has resigned. Back to you.
Okay, thanks a lot for that, Anisha. So here's a quick recap of our top stocks. Stocks with positive news flow this morning: United Breweries, IGL, Dixon, Amber, Titan, NBCC, Torrent Power, Hero MotoCorp, SBI, TD Power, Seat and Apollo Tyres. While stocks with negative news flow are Voltas, Havels, Blue Star, Jet, Interglobe Aviation, SpiceJet, Strides Pharma, Reliance Capital, Infosys, TCS and Wipro. We'll take a quick break on that note. On the other side, our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be with us.
Welcome back. We are in for a good start. That's what the SGX Nifty is indicating. 28 points higher, 11,080 is what you have. Today is the expiry, so obviously that means it's also the spot level. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, Ashwini. If we open at 11,080 on the Nifty futures, what would be the first trade?
Good morning. I don't think there should be a trade at this point. The boundaries were defined yesterday. So for me, it's either 10,900 or it's 11,150, 200. I don't think either points may come in. If they do come in, you should take the other side because market is clearly now sideways, and the kind of momentum we had because of news flow, etc., is not there anymore. So if we get to the boundaries, only then act. Similarly, Bank Nifty possibly 25,600 on the upside, 24,800 on the downside. That should be the range. Within that, crude goes up 40 cents, this goes down 50 cents. There'll be random moves like we saw yesterday. So the idea should be that let the market complete a consolidation and then go with momentum on whichever side. These marginal positives that we have in the overall context of the trend, they may not be able to change a whole lot. So whatever rallies, etc., you get into the upper zones should be used to build short positions.
Okay, the point is taken because crude continues to also be a negative even when we have positive news coming in terms of policy. Good morning, Sudarshan. What would your stance be? Add at 11,000 or not?
Good morning, Lata. Well, yes, the markets are now in a trading range. We can have different boundaries for the range, but the ranges are visible. For me, it's 11,050 and 11,200. So a move towards 11,050 would be a buying opportunity, as Ashwini just said, and towards 11,200 is a short selling opportunity. Now the underlying trend of the market is still down, which means that if we see a rally towards 11,200, we would be selling in that strength, because I think another low is in the offing in October, lower than the one we have seen. That's the larger trend of the market. But for the next couple of days, I am a buyer on every dip, because for the markets to go to 11,200, it has to rally 100 or even 150 points, and that's a tradable opportunity. So any 30-40 point dip in the Nifty gives me an opportunity to accumulate for that leg that I'm looking at. My stops are 11,050.
Okay, well, Mitesh Thakkar is also with us. Mitesh, what's your view for the day? And also, what do you see as the trend in the new series? Because in the series gone by, the pockets that got hit the hardest, the small cap index was down 11%. The PSU bank index is down 17%. So what's your view now?
Good morning. So I think in the near term, I would possibly say that we have made one low and we might be choppy. But my sense that eventually, I think, as Sudarshan also highlighted, that we will make newer lows. So I think for the time being, in the Nifty, I would look at a range of about 10,900, give and take 20-30 points on the lower side, to about 11,150 on the upper side. But we'll be more willing to look at shorting ideas on rallies or pullbacks. Similarly, on the Bank Nifty, I think 25,050 to about 25,700 looks to be a broader range, and closer to about 25,700, I would be more willing to go short. As far as the small cap, mid cap indices or the banking indices are concerned, I do believe that we will see fresh lows from here. At least 5 to 6% declines broadly across all these indices could happen in the next 3 to 4 weeks.
Okay, before I come back to you all for stocks, this is an important note coming in from the Reserve Bank. It is going to carve out a little more from the SLR to meet LCR. I'm sorry, all these are jargon. SLR means 20% of all the deposits have to be placed only in government bonds. Now, liquidity coverage ratio, which is LCR, all banks under Basel have been told that a percentage of your cash, a percentage of your deposits, which may flow out in 1 month, should always be kept as near cash instruments. After the Lehman crisis, they said, you can't say simply that I cannot pay. So you have to keep it as liquidity. You don't keep it as cash. What you do is you keep it as government securities. Now, what the government, RBI is saying is a little more of the SLR will be treated as LCR. So you don't have to double up on bonds too much. I keep for SLR and I keep for LCR. Already they've been overlapping it. Now they're overlapping it by 2 percentage points more. So to that extent, you're not constrained to go in and buy bonds. This will mean a little more liquidity available for others. Well, Soumyakanti Ghosh, the Group Chief Economic Advisor of State Bank, joins us. What's your take on this, Soumya? How will it impact? Will it improve the liquidity? Will it give banks a little more money to lend to NBFCs and stuff like that?
Actually, I haven't looked at the policy yet, so I can't comment. But as I can understand from what you are saying, it possibly is going to impact the bank, but not to the extent.
Okay. A little more of the SLR will be counted as LCR, 2 percentage points more. It was 11% of your LCR would be met through SLR. Now it is 13%. So to that extent, the banks don't have to chase government bonds, is my reading. Soumya?
Yes, I think that is, yes, that is absolutely fine. From 11%, I think for LCR, if I'm correct, it goes up to 13%.
Yes, yes.
So if that is the case, I think that is a positive move. But at the marginal level, I don't think it is going to impact the liquidity to significant extent, because the banks are already having excess of SLR, I think 5 to 6%. So it's a positive move, but I think maybe more needs to be done on this on an incremental basis.
Soumya, hi, good morning.
No, there is a sentence as well. I'll just point out. Yeah. Going forward, the Reserve Bank stands ready to meet the durable liquidity requirements of the system through various assessments, depending on its assessment, dynamic assessment of evolving liquidity conditions. So it's once again a more direct reiteration of what it said on Sunday, that we stand ready to provide durable liquidity. Will that help, Shomyo?
Yeah, that will help. But Lata, just one point I want to highlight over there. Even though the 11 to 13% is a positive move, but I think one of the long-standing demands of the banks is to actually treat these as securities, which so that it doesn't convert to MTM. So they don't have to provide MTM for the securities. I think that has been a long-standing demand for the bankers. So if anything is done on that front over a point of time, that will also ease the banking pressure on this MTM cover up, because already in the second quarter with the yields at 8.14% level, the banks will again have to cover a significant portion of their MTM losses.
Okay, so put together with the import duties and the liquidity measures that have just been announced, the intent of the government and the RBI is clear to increase liquidity, although it may be in marginal amounts. Do you think all of this will help with the sentiment on the rupee, Soumya? Or what's your own view on what the trajectory could be?
Regarding the import measures, I think the measures will improve the sentiment significantly, but I'm not sure how much is going to help at the margin, because just a little calculation shows that the overall imports which will be impacted yesterday is around 0.4 to 0.5% of GDP. And we are already looking at a current account deficit which could be close to 80 billion or even higher, which is closer to 3% of GDP. So I don't know how much is going to help on the current account deficit front, because now more action is on the export front. And also, I think there is also a talk about fiscal being positively impacted, but I believe that the impact on the fiscal should also be marginal. 3.3%, the difference could hardly be around 1 to 2 basis points, because the revenue collections should not be for the entire year, only for the last couple of months. And there will be some impact on inflation also, which again could be marginal.
Okay.
So on a net basis, I think the impact on all fronts will be marginal, but the sentiment will definitely get a boost.
Okay, Shomyo, thank you very much for joining us. But I don't think we should take this very lightly. This statement from the Reserve Bank that we stand ready to meet durable liquidity needs is very important. And I think that bond yields will take note of it.
Exactly.
It is a positive for Bank Nifty. And maybe even for NBFCs, it provides a temporary flow.
Exactly. That point is taken. I mean, the fall in money market perhaps beyond a point was just speculation. And, if nothing, just to have a regulator saying that it's there, that's good enough for now. But let's discuss individual stocks from our technical experts. Ashwini, your thoughts on banks, and what about your individual stock trades? Okay, I think let me take that to Sudarshan. Sudarshan, your individual stock calls?
Well, the individual stock calls are mixed and confusing, and that's the nature of this market, which is in a trading range now. I have two buy ideas. One is Cipla, which is on the verge of breaking out on the upside. It also comes from my favorite pharma space. So Cipla is a buy for the day, and assuming that we have a dip and a rally intraday, then Cipla could be a big reward. The second buying idea is JSW Steel, another outperformer in the metals, the best of the lot. Here also, it's on the verge of a breakout, so a positional trade as well as a day trade. The others are all short sells for the day. Random stocks which are in bear markets of their own. Castrol Industries is in a bear market. There is more downside here. Cummins has been in a bear market. When the market was going up, it was falling. That continues. And from my sector that I am now looking at regularly, NBFCs, LIC housing continues to fall. NBFCs, I'll repeat, is not a buy at any cost. They are all going to look like PSU banks after some time.
Okay, quickly then, Ashwini, what are your stock calls for the day?
See, in a sideways market, there is some pulls and pressures, and that's how the calls are kind of built up. NMDC is a buy with a stop of 114, target of 126. Hindalco is a buy with a stop of 236, target of 251. BPCL is a buy with a stop of 362, target of 378. NIT Tech is a sell with a stop of 1180, target of 1240. And Tata Elxsi is a sell with a stop of 1260, target of 1200.
Okay. Mitesh, what would you trade?
So I have a buy on ACC where some continuation signals are visible. Keep a stop at 1565, look for targets of 1620. Cipla features on my list as well. I would want to buy it once it crosses the pivot of 677, 678. Buy then with a stop at 669, look for 700 as the target. Equitas is a sell, keep a stop at 137.5, look for targets of 125. Also a sell on Mahindra and Mahindra. Sell in the range of around 898 to about 900. Keep a stop at 920. Look for targets of 865. And the final buy call is on Reliance, where the intraday charts are now turning positive again. So keep a stop at 1235. Look for targets close to about 1282.
All right, gentlemen, thanks a lot for joining us. But we need to take a short break. On the other side, we'll continue tracking all the macro developments. The RBI has announced a few measures to boost liquidity. More experts will tell us how to approach that news flow. Stay tuned.
Welcome back. Well, the important statement coming in from the Reserve Bank is that it stands ready to meet durable liquidity. For me, that statement is very important. And secondly, the amount of money that banks have to set aside to put into government bonds has decreased. They had LCR plus SLR, that is, I mean, forget the jargon, statutory liquidity ratio and liquidity coverage ratio. Together, they had to keep about 25% in government bonds. Now that gets reduced by 2 percentage points. The expectation is that, therefore, that excess bonds they have, they can give it to the RBI in repo and borrow from the Reserve Bank. The more they borrow from the Reserve Bank, the more liquidity in the banking system, in the interbank money market. How does this help? Does this help the NBFCs? Does it help mutual funds? Anant Narayan, professor at SPJIMR, joins us on the phone line. Anant, what do you make of the Reserve Bank announcements and its impact on bond markets?
Well, clearly it's a positive, and it should do a lot to assuage market sentiment. But I think the important nuance is the following, Lata. The market has been calling for durable liquidity. Now, whether it's in the nature of CRR cuts or whether it's in the nature of OMOs of long-term bonds, where RBI purchases those bonds. Now, that would provide permanent liquidity to the system. What the RBI is doing instead is reiterating the fact that it is providing ample short-term liquidity. See, there's never been a shortage of liquidity. It's the tenor of the liquidity which has been the point of contention. So what I think the RBI is reiterating is, for those of you asking about liquidity, here is more opportunity to raise short-term liquidity. I'm not providing you as yet durable liquidity, right? Okay. Which I think is an important balance. CRR cuts or OMOs, and we've discussed this in the past, could give the wrong signal at a time when we are having financial stability issues. And it's important to distinguish between lower rates and permanent liquidity versus the availability of short-term liquidity.
You think, Anant, the fact that they are giving the market more opportunity to raise short-term liquidity, you think this is a better way to approach things and the rupee would sort of stabilize henceforth? I mean, what's your view on how all of this could affect the money markets?
So let's look at the next issue, which is corporate bond markets, right? And the stress there or redemptions there. This doesn't address that directly. A provision of interbank liquidity or money market liquidity doesn't directly mean that credit appetite goes up. That issue still remains outstanding, and at some stage, RBI and SEBI might have to provide, as they did in 2008, a window for actually providing liquidity against quality corporate bonds. This issue does not impact that problem directly. As far as the overall markets are concerned, I think, look, this is a good sign, if you ask me personally, that the RBI is intent upon maintaining financial stability and will not give in to demands to ease liquidity permanently just because of a short-term stress.
No, Anand, the short point that the market would want to know is, if I'm a fund manager with corporate bonds in my portfolio, does life get any easier for me?
Not directly from this, Lata, because if you're trying to raise funds against a good quality corporate bonds that you have. Yes, banks would now have the ability to raise money from the RBI against their excess SLR. But does that mean that they will immediately want to lend against those corporate bonds? Yeah. Not necessarily. Yep. So that part still, look, it helps, but it doesn't solve the problem. Okay. That still needs a separate solution altogether. What
about the import tariff measures? I mean, the view is that, it may reduce imports just by about $500 million. You think it'll make too much of an impact?
Yeah, in terms of numbers, it's not very material, but I think the signal is important. Look, the first set of 5 steps announced a few days back were essentially capital drawing flows, steps to try and get in capital flows, which didn't make sense given that the basic issue is current account deficit. This one goes to the nub of the problem. These are not pretty choices. I'm sure there'll be a lot of criticism around that. But given the nature of our external balance, we have to have some demand destruction. We have to reduce our import demand. And this has to be one of the many other steps we have to take to reduce demand.
Okay. Well, thank you very much, Anant, for giving us the larger meaning of the announcements from Reserve Bank and government. The fundamental point is banks will have more cash because they can raise money on the excess bonds that is left with them. But with that excess money, will they lend it to the NBFCs is the question that, the Reserve Bank can do little to do at this point. Unless they, announce like the steps they announced in 2008, allowing banks to lend to NBFCs and backstopping it, giving them a refinance line. That is what the mutual funds want at this point in time. We take a break. We are coming back with the pre-opening rates. Devin Choksi also joins us with his analysis of the situation.